It's quiz time again.
Quiz time.
Okay, here's last week's questions.
Okay.
How did you do?
I don't know.
Okay, first question was, why is a fiduciary standard important to you?
Well, this is easy. Fiduciary standard means that the person that you're doing business with has their goals aligned with you. In other words, they have to put your interests first. The other standard in investing is called a suitability standard. And a suitability standard means they can sell you anything that's reasonably suitable for you, even if there's more commission on it, there's more profit on it for them. Obviously, that will be something that will influence their decision. The fiduciary standard is what you should be looking for because it mandates that they are on your side.
They're legally responsible for having your interest at heart.
Yep.
Okay, next question is, what is technical analysis?
Technical analysis is looking at the charts or the past pricing of a security and trying to read into that the future stock price and making investment decisions based on that. We talked last week about head and shoulders moves. There's other diagrams like cup and saucer and other things in the technical analysis. Another aspect of technical analysis is volume. When the stocks are moving up, but they're moving up on low volume, it's not as important as if they're moving up and there's a lot of volume, a lot of people are interested. It's not as strong a move. So technical analysis is definitely something that impacts the market, although cups and saucers and heads and shoulders are somewhat questionable.
And we're at the head and shoulders right now, so that's why a lot of people are a little bit concerned.
Head and shoulders.
Oh no.
No.
We'll see.
We'll see.
Okay. How do you avoid groupthink?
Well, groupthink is people getting together and somebody saying that, you know, the stock market's going up and everybody goes, oh, I agree, and everybody agrees, especially if the big boss says it, and then everybody just kind of goes along with it instead of thinking.
Herd mentality.
The herd mentality, instead of thinking independently. One way to avoid it is to have a devil's advocate in the group if you're in a group situation. If you are independent, if you're an individual investor or somebody that's just working on their own financial situation, one way to do it is to try to think independently and look at all points of view without being emotionally attached to any one of them. So they often say that high intelligence is being able to hold a thought without accepting it. And so try to be holding thoughts and thinking about things without accepting them as being totally true before you make your decision, and you'll have better independent thought.
Okay. Well,
so you ready for this week's questions?
Yes.
They'll be simple. Last week we talked about bond prices. So the first question is, how do bond prices move? The second one is, do you need to tighten your fiscal belt? And the third, of course, is does government involvement in a security or a stock provide an assurance that it's a good investment?
good ones.
Good questions, yeah. So take a shot at those, and we'll talk to you next week.